So I want to fill you guys in on a secret that banks aren't telling you. But before we dive into that, let's talk a little bit about banks. Banks are privatized financial institutions. And at the end of the day, they're there to make money just like any other business. And I'm not saying banks are evil, but their bottom line is not making their consumers or their clients rich. So years ago, I decided I wanted to study some of the financial strategies that banks utilize and understand the assets that they have so that I can possibly benefit and use those strategies to build wealth for myself and my family. So we're going to talk about an asset that banks utilize that most people don't know about. For most people, if you ask them where they save their money, they're probably going to say in a bank. So it generally surprises people that banks actually store and grow a lot of their capital completely outside of the banking system. Instead, they actually own life insurance. So I'm sure at this point you're probably thinking, why and how would a bank own life insurance? So let's dive into it. Banks store and grow a significant portion of their capital using permanent life insurance, but it's generally going to be a special kind of life insurance called a BOLI, or bank-owned life insurance, and banks own a lot of it. So when banks set up these policies, they're typically going to be the beneficiary and the owner of the policies. And when they set them up, usually they're going to insure their high income earners, their board members, or the executives of the bank. And they're not just doing this because they're nice. These policies are mainly put in place to benefit the banks. So when the policies are set up, they'll generally use them to offset employer-sponsored programs, for example, like healthcare, or it could be their 401k programs. And they also utilize them to help them diversify their investment portfolios. And then, upon the executive's death, a tax-free benefit is actually then going to be paid to the bank. So you're probably thinking, why life insurance? Well, banks purchase life insurance because it offers benefits that aren't available through their own products. Bank products have low rates and are taxable. And according to Bully.com, life insurance returns typically exceed after-tax returns of more safe and traditional investments like municipal bonds, mortgage-backed securities, and 5 to 10-year treasury securities by about 1.5 to 3% annually. And in 2016, BankDirector.com stated that life insurance net yields generate tax-equivalent net yields of 4.85 to 6.05% for a bank in the 38% tax bracket. Life insurance, when used and designed properly, becomes a tax shelter, and its guaranteed growth in monthly bookable income creates an asset so reliable it can be utilized as collateral. Life insurance is also considered Tier 1 capital for a bank, partly because life insurers invest for long-term stability. Tier 1 capital, or core capital, is used to fund day-to-day operations for a bank and is mainly composed of the most stable assets a bank owns that can easily be converted into cash. It also represents the highest quality of capital that a bank owns that, from a regulator's point of view, helps to measure the bank's overall financial strength, is a measure of how well a bank is protected from the risk that it takes, and is essential to the overall health of the bank. But no asset doesn't come with some risks. So for banks, since these policies are set up different than the general population, if a policy is surrendered because they cannot keep up with premiums, cash value appreciation is going to be taxed, and on top of that, a 10% penalty is also going to be added on any of the gains from the policy as well too. And another concern of banks is also the credit quality of the life insurance issuers. If a bank gets a policy from a life insurance company with a poor credit quality, that's really just going to add additional risk that the bank ideally does not want to take on. So let's dive into some more facts about banks and BOLIs. Around the start of the financial crisis, banks started to accelerate purchases of these old-fashioned products. Life insurance bought protection, stability, and growth during these uncertain times. And during the Great Recession, BOLIs, or bank-owned life insurance, outperformed both stocks and safe assets that banks were selling to their customers. And according to data reported to the FDIC, banks are some of the largest purchasers of cash value life insurance. The total cash surrender value of all policies held by banks was about $202.4 billion as of June 30th, 2023. And the most common reason cited by bankers for purchasing life insurance is that it provides competitive returns with superior credit quality. Best-selling author Barry James Dykes said in an interview once that the banking industry is one of the most influential and powerful industries in the US, and they have a deep affection for cash value life insurance and treat it like a golden asset. So how does this all help you? Your family is not a business and they're certainly not a bank, but I do encourage people to think of their family's finances as their own personal economy. Banks and other savings institutions that remain healthy put tried and true financial advice to work. They think ahead and save money in long-term assets that outpace inflation. They resist high-risk strategies for short-term gains and speculation, and they anticipate and prepare for costs and unlikely losses. They build equity in assets like real estate or life insurance, and they avoid, defer, or reduce taxation, understanding it's not about how much you earn, it's about how much you keep. And they don't forget rule number 1, which is never lose money. Life insurance can strengthen a bank's balance sheet and yours as well by bringing stability, long-term gains with favorable taxation, and grow your cash reserves at rates that are several times higher than the average bank savings account. So I hope this video is helpful, but for some, it won't be. Not everyone's goal is to build wealth and maximize their capital, and some people are just comfortable living day to day and not really caring much about their future. But if you've gotten this far, you're probably not like most people. So it may be beneficial to pay attention to what banks do and not what they say. So if you guys like this video, please like, comment, and share it. It really helps us reach more people. And if you have any questions or want to understand more about whole life insurance, investments, other types of things that can help you guys out on your wealth building journey, there's going to be a link down in the description to schedule a call. And we'll see you guys soon.